David, we had a bit of initial weakness this morning in the rand, but it's strengthened since then. We had that purchasing managers index on just a short while ago, coming in a lot stronger than expected, and of course also hope that we are going to see a bailout for Greece. So all that seeming to be quite rand supportive.
All of those factors, I think, particularly the PMI playing out into very supportive action for the rand. The Greece story, it's a very difficult one to fathom at this point in time because we keep getting conflicting reports. One day it's that they are going to get support, the next day is that they're not, and they're going to have to fight the fight on their own. I think really, the Greece story in particular and the fiscal story in general is going to be something that plays itself out over a long period of time, and it's something that I really see as a risk for the global economy going forward, Stephen.
Well, were you surprised with the extent of the rise we saw in that PMI? Because I think the market was looking for more of a sideways movement from the 52.5 that it struck in January, and yet all the way above 60.
Yeah, I think I was very surprised by that data, and perhaps it shows that the South African economy is moving out of the slump quicker than previously expected. However, it's not backed up by credit demand numbers at this point in time. So a little bit of a mixed picture, but it was a very good number nonetheless.
Well, as you said, and not backed up by the credit demand pictures, and we had the M3 and credit extension data out on Friday and looking flat to negative. So, as you say, there is very little demand coming from businesses and from consumers at this point, is there, David?
Well, I think, Stephen, the consumer particularly is the one thing globally, not only in South Africa, that is the concern at the moment. And that's really on the back of a really benign labour market. Sometime this week we'll see jobs numbers coming out of the US. And I think if we don't see some dramatic or some turning news coming out there, I think the picture going forward could be a little bit bleaker because, it all depends on the consumer, and the consumer's sentiment and consumer demand at this point in time all depends on whether new jobs are created. And that's the key for me, the job creation, because if that doesn't come through, the fiscal problems that the world is following is going to create, I think, potentially our next problem, and if not, even leading to our next crisis.
Of course, we had US Fed Chairman Ben Bernanke last week reassuring the market that interest rates for consumers would be staying at these very low levels for the foreseeable future. Of course, we have our own Reserve Bank meeting later this month. It's got the PMI data, which is now higher than expected, showing that growth is coming through in that sector, but at the same time, no demand for consumers. How's the Reserve Bank going to balance that, do you think?
Yeah, the Reserve Bank's picture is a little bit confusing as well, and it's adding to the sort of volatility that we are seeing in the market because we mustn't forget that the Minister of Finance changed, if you like, the governor's mandate to include growth as well. Now the data coming out has been growth supportive, but at the same time, we've got benign inflation, albeit a little bit above the top end of the range. That stands at 6%. Today we saw PMI data coming out. Now I think there's enough data or enough evidence within the data, Stephen, to suggest that the Governor Marcus may in fact hold off on interest rates just to wait and see what will come out in the next few weeks.
Of course, we had that mixed data coming out of the US on Friday. Fourth quarter growth coming in stronger than expected at 5.9%. Disappointing consumer confidence and housing numbers, though. Also, that growth figure looked like it was boosted by restocking. What was your view on that data?
I think all the data coming out at this point is really confusing, and as I say, that's been backed up by the volatility of the markets. One only has to look at a chart of the gold price to see the extent of the confusion that reigns in the market, because on one day you get very good data, economic data coming out, and the next day it's really problematic data, and that's backed up by what we're seeing in the market. I think Mr. Bernanke, when he said the interest rates are going to stay lower for longer, really backed up that uncertainty. I think we have an uncertain, certainly a few months ahead of us, and if we don't see the picture improve somewhat, I think we've got a rocky road ahead of us, perhaps in the second half of this year.
Of course, at the same time, we have spreads widening between US Treasuries and the German bonds, the 10-year German bonds, which would indicate really that interest rates will go up in the United States well before they go up in the Eurozone at this point.
Well, recent data has pointed to the fact that the US is recovering perhaps quicker than Europe, and those spreads have widened. And this is exactly my point, Stephen. I think when interest rates threaten to go up, it's going to throw a little bit of a shockwave into equity markets in the world. and that particularly if those interest rate rises are market driven. So when people start losing a bit of confidence in the fiscal situation globally, that I think is potentially quite problematic for the world's economy. If the market starts driving up longer term interest rates, particularly as the Fed scales back its asset purchase program, I think we might see some ripples filtering through into the equity market, and if those interest rate rises are not backed up by economic activity, I think we potentially have the makings of new problems, new ripples, new circumstances that the global economy has to overcome.
David, where do you see the rand going from here? Currently around 765, but of course last week it traded all the way to 789 and looked set to test that 8 rand level against the dollar. Do you think we're going to be retesting that level anytime soon?
I think, Stephen, very difficult to make a call at this point in time because of all of this conflicting data coming out. 760, 763 seems very good support at the moment, and certainly we're going to need perhaps a weaker dollar or in fact, for that matter, much stronger equity markets to drive it through that level. But, you know, the rand has really benefited from a trade-weighted basis. Yes, we've seen some weakness coming through against the dollar, and the dollar has really strengthened against everything. On a trade-weighted basis, the rand has held its own, and I expect that picture to remain so at least you know, for a month or two leading up to the World Cup. Beyond that, it's really difficult to see, and I see some orange lights flashing as far as the global economy is concerned. So it's really a short-term picture versus a long-term picture at this point in time. The long-term picture not looking rosy at all for me until we see some consumer strength, some jobs being created, and the consumer actually lifting the global economy.